Hello friends, welcome to Forex analysis. Today is 17th of April 2023. This is how I usually look at my charts when I am observing EURUSD. This is 4-hour chart. That's a chart I typically look at. I can go on daily, sometimes weekly, go back on hourly, but my usual chart for analysis and entries is 4-hour chart. That's what you see. Now, what do you see else on my chart? You see the black lines are USB interest decisions lines. That's when USB was hiking rates, exact time and date. And I use them as separators. You can also use as monthly separators or NFP days separators. Is up to you. I have all of them in other charts because I trade only EURUSD, so I have several EURUSD charts where I can look in different ways at the charts. At the bottom you see my outlook, Myfxbook outlook indicator. This is sentiment data in there, and as you see, it's not hard to guess that we will be going up, because if you look down at Myfxbook sentiment, you see that the blue line, all the way since October, their home was between 3,000 and 5,000 lots. This channel. And that's that they had been sitting there for a long time, since the uptrend started back in October. Well, they managed to go higher only between the February and March ESB decisions in this time span. Also after NFP decision here, they managed to push higher. We had a retracement, but currently their home is between 3,000 5,000 lots. So, and you see they are making lower highs each time. So this pullback is reaching its maximum because it's likely to be another lower high, and then they will go back to their home, and they will be back to their hole presumably tomorrow. Tomorrow they should be back there, and tomorrow we should see the push up probably during the American session, because their rises are very sharp and their fall downs are also very sharp. They can't hold very high, so they return back to their nest pretty fast. At the same time, we see that the reds, let's call them blues and reds, because if you call them bulls and bears, it will be misunderstanding, because we look at the contrarian approach when the bears are dominating, price is going up, and when the bulls are dominating, price is going down. So it's a kind of, because we would call the reds bears and price is going up, it doesn't make sense. So let's call on those red and blue retailers. This would be more fair in relation to price. So the blues right now are making their at their highs. I don't think they will push very high. It's very unlikely. I think you see the hook already. The hook is already there, and you see since 8th of March, since the 2nd of March, their falls were all the same. They were falling down very sharp. So when you see price started rising very sharp, also immediately, and where the price is rising, it's at the reversal level. It's at the Camarilla L3 S3 reversal level, the pink line. You see that's where price reverses. You see I entered long here, somewhere here. So I was ready for this drawdown. Because I would be ready to take a stop only below somewhere here, below this opening range. Otherwise, for me this drawdown is okay because my average trade is 10 days. I look at on my Myfxbook because my account is connected. For the past years, my average trade lasts for 10 days. So this rise was 4 days. For example, this 218 pips took 4 days to go up. So my target is at around 111. Will take there a few days. So so I don't look very much at charts, otherwise just put the trade and walk away. So I added another long here when we below at the reversal level, and I used the opportunity to enter long. So and we will be going up. That's pretty obvious, at least to me. Also, we are at we poke it through 110. We already have been trading about 110, as you see, and we will make it to 111, I guess, this week, sometime next week, back to 111. You see, also the reds are at their lowest. You see, this is the level the reds stay. Like when they push down, they come to 6,000 lots. This is the lowest since the last interest rate decision that they come down. So they are at the bottom. How far they will push, I don't know. They might push very high, they might push somewhere, maybe somewhere to here, to 15,000 lots, the reds. This will go down back to 3,000 lots. It's pretty obvious. That's their home since October. I wouldn't expect any changes in this sentiment pattern until the next interest rate decision or until the next NFP news. Those can catalyze the market. So I believe will stay. Their blues still will keep their home until then, until the next interest rate decision. Otherwise, here you see moving averages from multi-time from moving averages. I usually use 8. Steve Bigelow called it 8 EMA as a trigger line, T-line, because price respects it very much. So I added 8 EMA from monthly, weekly, and daily. And then I used another concept from Jack Bernstein. He's using this double open of the EMA of the open and EMA of the close. If close is above the open, the red you see line, it means trend is up. And this is the case now. We are in very strong uptrend now. So it's a kind of nice that price pulling back and gives us a chance to enter. Today I wanted to show you another thing, the importance of round numbers in Forex. Here we go. You see people usually place very much belief in support and resistance. I don't do so. I don't believe in support and resistance, the lanes that you draw yourself between certain levels. I don't believe they are very important because they are subjective. You see, they are subjective, the lines that you draw yourself. And if there is a very strong uptrend driven by interest rate decision, they will poke through those levels very easily. Now we are in very strong uptrend due to the EURSD hiking range as never before in many years. So we will see a very big push up. That is my opinion. But when it comes to round numbers, those are the true support and resistance. Round numbers, not small round numbers, big round numbers. And by big round numbers, I mean round numbers from daily chart. And I mean 95, 1, 105, 110, 115, 120. I mean the big round numbers, not every small round number, 7, 8, big round numbers from weekly, daily chart. They are very important. I will prove this to you. You can see it for yourself. So what I do usually, I plot those numbers like 95, 1, 105, 110, 115, 120, 125, and so on. So those are very important round numbers. You have to watch those. This is true support resistance. And in between those, I divide them by 2, simply by 2. You see I put a middle between 1.5 and 110, which is at 0.75. Then the middle between 110, 115, which is 125. And you will see how price respects those very much. Let's go back in time and take a look. Back to the COVID year, where we had a lot of trading. Look, where did price stays between those two round number levels, between 1075 and 110. Where did it make high in 2020 at 115, precisely to the pip, you see. And then we broke above 110 and we push it all the way to 125. Right now we also trading below 110. We are at very important round number level. So we might see something similar action like here. Breakout through 110 can be significant. And you see here we stop it at 120 exactly, push it back to the 175, 117.5. You see price very much respects those levels. Here our top was at 225, then we go below 120. Price always stumbles at those levels. You will see it on daily yourself. You see what happened, even we can go closer on 4-hour chart. We broke through this level, you see retested it, and then we push it through 110, and we were going to break 110 again. There was first break here, second break. Now we'll have a third break through 110. Usually it's safe to place stops below those levels, like it's quite safe, because if usually starts trading above those levels, it usually trades there. It's those levels are like really walls, so it's very much recommended to use stops below or above the big round numbers. At least you will be safer to do so. Chris Laurie was teaching this, to use round numbers for stops above, below. Of course, they do have price is not so easy for the price to break through 105, for example. Like here you see how much it was congesting about 105 before it managed to broke, and then didn't even. And then when we went back over to the round number, another level 1075, and then it's broke through and it stopped here at 100. You see how 100 held again, and here it's again retested 10975. So those are round numbers that matter. I did back testing, and they do matter. You can see it for yourself. Here you see breakouts through 105. Here you see a retest of 105 after NFP news, and then breakout further up. So those round number levels I do have on my chart that I watch. So you can see them here, black lines. 110 is on my chart, and 15 is on my chart, 100 is on my chart, and then I have the middles. Of course, slide it somewhat because I use manually. I put them manually because there's so few, so sometimes they slide a little bit. Anyway, so that's where we are. Here was a nice buy. We have about moving average and about we're rejecting from 1075. So I wait for the breakout above 110 and trend into the next round level, which will be 125. 12.5. So here you see how price respected the one level, with how important it was rejecting and coming back and so on. Lots of action around those levels. I did even a post on TradingView about round numbers. those levels. You can see it on TradingView and my TradingView page. So so we are right now at the reversal level. Weekly reversal level is it's a good proof. It's good confluence. Here you see at sentiment data we are also reversing. It's quite obvious, and here we are also reversing at the weekly reversal level. We are in the monthly bullish zone, the area above the opening range all the way to the roof. I call it the bullish zone, the zone of bullish action, and then the bearish zone is the area between the opening range and the floor. That is the bearish zone. So we remain in the bullish action zone, monthly April bullish action zone. We pull it back after we poke it through the roof, and I wait another push, another new high, which will reach, as you know, the median level, median R1 111, which is at 111, and we will go above it, I'm pretty sure. So that's how you can see. It's pretty easy to trade EURUSD if you have sentiment data below, because if you look at the levels at which the blues and the reds stay, it gets pretty obvious. So you wouldn't be afraid of those pullbacks, as some traders who might think that price is reversing is going to stop them out, and they are exiting their positions and in fear. If you see here, you understand that this is temporarily pullback and that the price will reverse, because the blues do not belong here. You understand? The blues belong to their hole between 3,000 and 5,000 lots. They push above, but they don't have the strength to hold above. And this had been so since for a long time now, since 2nd of March at least. For more than 1 month, they had been doing those pushes, sharp pushes. So I also knew that this uptrend will have the big sharp pullbacks because of those sharp movements, sharp pushes up and returns. And that's precisely what happens on the chart, as you see. This is what I wanted to show you today, and I hope this will help you in your trading. And another thing I wanted to show you, that right after the interest decisions we can have the big pullbacks. That's what, if this pullback would happen after the interest rate decision, I would be concerned, because look here, in October we had the pullback of 348 pips. Then again, after the interest rate decision in February, we had the pullback of 500 pips. Those pullbacks would kick me out. So if this pullback would happen after the interest rate decision, I would be concerned. Do you understand? Like here in 10th of June, there was no interest rate decision, no hike then, but there was interest rate decision. They didn't raise the rates and nothing, it was at zero. But still, after this decision, zero decision, there was a big drop of 350 pips. So it's not guaranteed, even if ESB hikes rates, that the price will trend up immediately. You know, you have to be mindful. Price can go push down before it goes up. So we might see similar action after the next hike, this fake move before the price moves high. You see, like here, they raised the interest rate decision, but there was a big pullback before the rest of the month price was going up. There's like a gearing up accumulation pullback. So next interest decision will be now in the beginning of May, and we will see they are going to raise rates, so it's already marked as a black line on my chart, and we will see what happens. And so I wish you success in your trading. Thank you for your attention. I'm not sure if I'll keep this material free online for a long time, so watch my videos while they are still available, because this is a true value material which really gives you the edge in trading Forex. So watch my videos and try to learn something, because I might make my videos private after some time, or make them paid through the website. Anyway, at the moment they are free. Enjoy my content. Thank you.